people used to pay. Coulda buy a yard, raise the youth and live okay. But then the bankers get greedy, flip up the game. Gold standard mash up, it never be the same. Boom economy, government never want wait. Them spend pan borrowed money, drop the interest rate. Central bank printing, money start lose weight. Them convinced no bill would I ever have to get paid. Me believe it when me see it. Me sure me not go miss it. It make me want live it, but only if it really legit. No recession, no cry. No recession, no cry. Change up the definition. So slide. No recession, no cry. Life did sweet, people get rich, time feel nice. Living big pandate, not thinking about the price. No turning back, default and knock pound we gate. But the genie up, too late feel like that fate. 50 years past, need big job just to survive. Politicians still a chat like all things alive. Job market sinking, but them say it alright. Them twist up the data, hide the truth out of sight. Me believe it when me see it. Me sure me not go miss it. It make me want live it, but only if it really legit. No recession, no cry. No recession, no cry. Change up the definition. So slide. No recession, no cry. You them lost, can't build no family. Population drop, this your madness up your tragedy. The rich invest in asset, poor man stuck on rent. Leaders push them agenda, but no ask where the money went. Industry done goes down, Alfie carbon name. Yet earth still a spin while people play the blame game. Me believe it when me see it. Numbers don't match after the fact, them fix reports and cover tracks. Camel finance me real brother, one we truly never deserve. Bless up him, the guide the future we are try preserve. No recession, no lie, Camel Crew no need to try. Always the head of the game, no concessions till we die. Feel up, bubble.
Unmute the mic. Good morning, everyone. Good morning, and welcome to the Camel Finance post FOMC live stream. Thank you all for being here. I've set a timer on my phone, so I'm going to try and keep this one relatively short. We'll see how that goes. I always get distracted and I always overrun. But yeah, thank you all for being here. I can see everyone is really happy, a lot of the members at least, with the crypto stocks finally getting a nice pump, so happy days. Yeah, Bitfarms has done really well. I think it's up a couple 100% in the last week or so. Can we do, I don't know, I'm not taking chart requests just yet. I do owe somebody, I think Tofu, a NASDAQ chart. So we'll do that. If somebody could just let me know for my own sanity that you can hear me, then when we can progress with this, I guess. I also want to come at this, I want to preface this actually. I've got a whole heap of slides today that pertain to FOMC and the kind of things being thrown around, ideas, speculation, this kind of thing. And I'm mostly going to point at it and say I think most of it is wrong, okay? But I want you to realize this is not supposed to be a I told you so type of thing. This is just me trying to encourage people to look for themselves, right? Rather than take things at face value. You can all hear me loud and clear. Thank you very much. All right, so what we will do is, if I can click the right window, I'm still a jank live streamer, as I'm sure you all know. Wait, can you see the chat? Yeah, okay. So I'm going to run through a few tabs. I first of all wanted to say congratulations. More and more of these members are doing extremely well for themselves. This guy right here, for example, has managed to put 50% down for their oldest son's first house. So congratulations. I know there are a bunch of people having a lot of success at the moment. And I continue to preach that it's really about locking down these levels, not feeling guilty about taking profit. I know a lot of people out there will want you to hold things forever, diamond hands, but we're all in different situations, right? If you want to buy yourself a house or your son a house or, do any kind of thing that is going to increase your quality of life, then that should come over having the world's greatest and biggest Bitcoin stack, for example. So congratulations, well done, keep killing it. And without further ado, let's get into today's kind of FOMC review, right? First of all, purple tie means we pump, okay? If you know, you know. And if you don't know, I don't care at this point, to be honest. When we see things like there's like all these accounts, right? This is the biggest issue I've got. So I'm trying to condense my thoughts here. Essentially what I'm trying to say is, right, we've had this 25 basis point cut. And again, we knew we would get that, right? We absolutely knew because, okay, tell that to the bond market. And this is what I want to kind of preach today before we take some questions and Q&A and all that kind of thing, right? If you really think about it, for weeks, people have been talking and guessing and speculating, and all we did was look at the bond yields, right? Everyone had their opinions, everyone had their ideas. People were saying inflation is sticky or it's not sticky. People were saying the labor market's fine or it's not fine. People were talking about AI maybe revolutionizing the world, no more recession. There's all these ideas and speculations, right? When really, I think what we demonstrated, again, is that you don't need any of it. Right? You can actually perform at an extremely high level of competency by simply reading the 10-year yield or even the 2-year yield, right? I mean, they kind of move one and the same anyway. But I thought this was kind of interesting. And again, this is what I want to kind of point at today because I've got a bunch of things to show you that I think are wrong, frankly. But again, it's not an I told you so thing. It's more like I just want to point at this and say maybe people should get in the habit of fact checking what they see on Twitter. Okay, so I'm not going to go through this thread because I don't think it matters, right? We knew we were going to get 25 bips. We got 25 bips. And moving on, okay, again, it's a tell that to the bond market situation, right? Because anything that happens to the 2-year yield or indeed the 10-year yield, okay, will drag the Fed funds rate with it. So when the green, which is the 2-year yield, tops and moves lower, okay, then guess what's coming next for the Fed funds rate? You guessed it, right? And now we've had another 25 bips cut, which hasn't quite updated yet, but we now look something more like this, okay? So we're on our way down lower, okay, as expected. And again, it's just to tell that to the bond market situation. And remember, I think people kind of get stuck on this idea, or they get confused by this idea of tell that to the bond market because they don't understand that the Fed funds rate is really just the interbank lending rate, right? That's the only rate the Fed actually controls. But things like the mortgages are set off the 10-year yield, right? That's why we call it the chart of truth. So this is really something that doesn't apply to anyone apart from banks, right? That's what this orange Fed funds rate is. And it's the bond market in aggregate that determines whether it wants to be net buyers or net sellers of debt. And depending on whether it wants to be net buyers or net sellers, depends on which way the yields go. And then, of course, wherever the yields go, that's where rates go. Yeah? So it's actually extremely simple to grasp. And even if you didn't understand what I just said then, again, it's just a case of which direction are the yields going. If the yields are going down, then you can bet your dimes to donuts that so are the rates. Yeah. So happy days again. And it's just funny because everyone's got their opinions, right? But you really don't need any of it. So speaking of opinions, I'm not picking on this person in particular. I just wanted to kind of show you what I'm talking about again. Okay. So people are saying this was a crazy FOMC. To be honest, I don't know. I didn't watch it. But they were saying, rarely do you see such a wild dot plot, which is true. We'll get to that in a moment, okay? But right now, we have cut the rates by 25 basis points. Okay, we knew that was coming, as I've said a million times. They're saying growth is slightly up, but really this is not true, okay? This is actually not true if you factor in, if you exclude exports and that kind of thing from the... the knock-on effects of the tariffs, right? If you exclude all of that, growth is actually trash, okay? That's the first kind of misnomer here, right? We're not in a growing economy. That's just the truth of it. Unemployment flat. I mean, Really? Like, do you see what I mean? As soon as you start to look under the hood, okay, this is just complete fugazi. Unemployment is not flat. The labour market is deteriorating. I keep showing this day in, day out. I keep showing this every weekend at the deep dive. Henrik Zerberg has put together a bunch of very nice charts that show this as well. I think I've got one in a minute coming up for you guys. And at the same time, we've just seen one of the largest downward revisions in history. 911,000 jobs just disappeared overnight after they revised it down. And then the majority of the market participants think the unemployment is flat. Like, do you see what I mean? There's a huge disconnect here because people are willing to kind of read this and then just hit the retweet button instead of actually look for themselves. Now, this exact same kind of pet peeve of mine is true of inflation being slightly up. There is no world, there is not even a parallel universe in all of infinity that exists at the moment in which inflation is sticky, right? That's just not true. We are heavily disinflationary. We have been heavily disinflationary for a long time. And the only thing creating the illusion of inflation being slightly up or sticky inflation, okay, is shelter, which is lagging. As soon as you replace that for a real-time metric like ALNRI, which, by the way, has been deflationary for about 2 years now, okay, then we're already at or below the inflation target that the Fed has held for a long time. So again, this is just a misnomer. And I even saw, wait, let me see if I can pull this up. Where can I get this from? In here. I was kind of being a bit facetious about this, kind of poking fun at this guy. But it's actually true. Right, hang on. Let me find it. I'm interrupting my own flow here. Yeah, this guy. Look, I said this kind of needs a community note, right? Like this guy, 2% inflation is a myth, or worse, a lie. Anyone living in the real world over the past 5 years knows this. No. Okay, this is, like I said, it needs a community note. This is either deliberately misleading, right? Or this guy has no idea that we're measuring rate of change, right? Which makes him totally unqualified to tweet anything ever, right? Like, this is the level of amateur that we are dealing with at the moment, okay? This guy doesn't know the difference between absolute inflation and rate of change, right? It even says right here, cumulative price increases, and 2% inflation is a myth. These two things are entirely different metrics. They are not in any way, shape, or form related to each other. But this is what we have to deal with at the moment, right? And maybe it's just because I'm autistic and it kind of upsets my autism. I don't know what it is. But you can probably tell from anyone that's been following me for any length of time at all, I'm getting increasingly kind of locked on and wound up by this kind of stuff because this is just misinformation, right? This is what this is. This is either deliberately misleading people or, like I said, it's just so underqualified to actually have an opinion in markets that it kind of hurts my feelings. And I actually don't think it's the latter. I think this guy is deliberately just kind of shitposting, excuse my language, to engage in like kind of engagement farming, right? I believe that's a lot of what's going on here. Anyway, let's get back to this. So inflation, to say it's slightly up is amateur, frankly, okay? And then we're talking about 50 basis points of future further reductions until the end of the year. That's up for debate, okay? But again, we don't need to debate this. We don't need to listen to what the Fed says. We don't really need to look at the dot plot. All we need to do is say, is this green line going to continue to go down? Because if it is, then we can start to figure out how many more cuts and of what type of size they will be, right? And if this thing trades sideways or up, then we can say there's no more rate cuts coming this year. So again, all of the talking heads, opinions, speculation, absolutely worthless, okay? Tell that to the flipping bond market once again. Excuse me. They're talking about a terminal rate of 3%. Again, they don't really control this. The bond market does. Again, so tell that to the bond market as well. 1 to 2 cuts we've kind of already dealt with. No recession on the horizon. Okay. Yeah, we'll find out, right? We will find out. So as you can see, we've got this kind of skew, this absolute mess of misinformation, of people retweeting things and parroting narratives without checking for themselves, without going under the hood and really diving into the data, and frankly just ignoring a bunch of things that are happening right in front of our eyes. And even the Fed officials kind of seem to be engaged in this malpractice, right? Because this is the most divided the dot plot has ever been, or at least according to this guy it is, right? But 9 out of 19 Fed officials saw 2 more interest rate cuts this year. Meanwhile, 6 of the 19 see no more cuts in 2025. So, like, the question I have here is, do they actually believe what they say, right? Or do they just kind of put this information out there to confuse the masses? Again, the funny thing is it doesn't matter because tell that to the bond market, right? Wherever that chart goes is where the rates are going to go as well. And so that's kind of my rant, but I've got one more thing to dispel here, okay? And that was this. Lots of people were asking me this same question, and they were saying that apparently 20 times out of 20, the rates have been cut at the top of markets, with stocks at all-time highs or close to, like they are. Then a year later, stocks are up. Okay, I've seen a lot of people ask me this. Hey, Camel, you're saying these rate cuts are probably bearish. These are probably cuts into a slowdown, yada, yada. You know, is that true, or is this thing true right here? And I said I was going to dispel this in the live, and true to my word, right? I don't even have to, because this thing got community noted, right? So you've probably seen this. Again, it speaks to the misinformation, people parroting ideas without checking for themselves, right? Not a single down period for equities 12 months out when the Fed has cut rates near an all-time high. This is totally false, okay? It's a lie. This is a lie, right? This table omits certain data that proves the claim false. September 18th, 2007, the Fed cuts rate with the S&P at an all-time high. 12 months later, the S&P return was down 24.3%. What about in June 2019? Fed cuts with the S&P at all-time high. 12 months later, S&P 500 is down 7.4%. Okay, so yes, this is extremely helpful. Now, again, encouraging people to do the work for themselves, to look under the hood. All you had to do when you read something like that, okay, was say to yourself, maybe I should check, right? You pull up an S&P 500 chart, just like Tony the Bull did right here, okay? And you overlay the Fed funds rate down the bottom, again, just like Tony the Bull did here. And you can see right here, okay, cuts, boom, cuts, boom, cuts, boom. Okay, it doesn't take a genius to look at when they started cutting rates with the stock market at all-time high to see that 12 months later, okay, the market's down heavily. So anyone with any degree of work ethic could have invalidated this idea immediately. But for some reason, there is this terrible laziness that exists within investors at the moment. And that's the end of my morning rant, frankly. But my message is simple, okay? Please do your own research, okay? It's super important to actually look for yourselves, verify what you're seeing online. Don't parrot narratives and contribute to the misinformation soup. Don't get kind of caught up in these ideas and just start parroting them and retweeting them without actually verifying whether it's true or not. And that includes the things I say, okay? Don't just take what I say at face value. Out of everything I've said today, you should be able to go and verify it, right? It's either the truth or it isn't. It should be pretty straightforward. So I think it's pretty easy to tell that, these last 3 rate cuts, because they were cuts into a slowdown, rather than normalization, right? Jordan Lindsay's been on top of this for as long as I've known him. You can see it here, right? The Fed is cutting into a recession or normalization. The difference is minus 12% when they're cutting into a slowdown, or plus 14% 12 months out if this is cutting into normalization and a soft landing, right? Normalization means that we are having inflation return to baseline or to the normal range without having a recession, okay? And cuts into a slowdown are the opposite, right? Cuts into a hard landing. This is cuts into a recession. And whenever we cut rates into a recession, the stock market sells off heavily, okay? This is the same message I've been preaching over and over and over and over again. But it's really important. I also showed yesterday you can screen which one of these rate cuts is going to be bullish and bearish based on the yield curve. Every time we get rate cuts like this with an inverted and reverted yield curve, it marks cuts into a slowdown. And that's what we've got at the hard right edge. So along with everything else I've been showing you, is you can do the same, by the way, with the unemployment rate, right? When the unemployment rate is ticking up and labor market deterioration is present, then cuts are into a slowdown. And that, again, is what we've got at the hard right edge. So to say these are going to be bullish cuts kind of doesn't make any sense, to be completely honest with you. See what other charts I got before I take some questions. They're saying that, oh yeah, this was the Fed speak. So again, I don't really care what he says, right? I don't think it's important. I think the bond market is what matters, but they've been talking about reducing the size of the balance sheet. They're going to continue to do so, okay? Which means liquidity will keep being drained. And even if rate cuts are on the table, which of course they clearly are, then QT is not going to stop. And that's very, very important, okay? They're not slowing down. The idea that they're going to start to print, or that stealth QE is going to prop up the economy, or any of these other narratives, okay? It doesn't matter what they think or say. What matters is what they do. And until they even stop QT outright, which they haven't done yet, then we can't even entertain the pivot to, undoing the QT entirely, or said another way, Fed balance sheet expansion, printing, buying bonds. But don't get it twisted. They are going to buy the bonds, right? That's how QE works, and that's why the macro call for the rates to be slashed down to zero is part of it, right? They're going to have to, first of all, buy a bunch of bonds to get the yields all the way down to zero, because if they're not at or near zero, when I say bonds, I should be clear, I mean bond yields need to be at or near zero before QE is even effective, right? So we've got to have this green line all the way back down into this neighborhood before we can even entertain printing. Otherwise, the printing is just kind of ineffective. And part of the way those yields get down there is when they start to do the Fed balance sheet expansion, they're going to become buyers of their own debt again. And when you buy the bonds, the yields continue to move down. So, you know, all of this is pretty straightforward if you understand where to look. Ultimately, QT's not stopping yet. There's less money in the system, tougher conditions ahead for a while, bearish signals for risk assets. So in the short to medium term, yes, we can complete some blow off tops. We've got historic Bollinger Band compression for Bitcoin, which is super, super interesting. Okay, it doesn't predict direction, but it does tell you that when the move occurs, it's going to be extremely violent. Okay, now at the hard right edge down here, you can see this is how compressed the Bollinger Bands are. The last time we were this compressed, we went from about 49k to, was that 108k, something like that? And the time before, we went from 25k to 74k, okay? And then the time before that, we did this huge whopping move from, I don't even know what this is, like 3k maybe? No, that's 3k. So this might be 1k to 20k, something like that. It might even be less than 1k, okay? So anyway, big move, big move, big move, and at the hard right edge, setting up for a big move. Now, if it is to the upside, of course, that would make sense. That would fit my call and my expectation, but we cannot rule out that this move will not be to the downside just yet, okay? But based on the cycles and everything else, I think we've got a good chance at seeing the final blow off top moment, and of course, that's what we've been calling for the entire time. And the last thing I wanted to point out as well, again, a lot of people want to say there's no chance of recession or the government's not going to allow it and all of this other stuff. But look at the huge disconnect between job openings and markets. Okay, normally these things track. And what have we got at the hard right edge? Jobs declining, clear labour market deterioration. Okay, whilst the markets are moving higher. Now, the markets are not the economy, but historically speaking, there is going to be a catch-up trade. So either we've got to have loads and loads of jobs come back, or more likely to me, this blow off top, this near vertical price action is going to resolve to the downside. So I'll leave that with you guys. Before I know people are going to request some charts. I think we ought to just quickly run through them, to be honest, and then we'll take some questions. So first things first, the stock market. Look, we know we're due a kind of shakeout into a daily and weekly cycle low, but we also know that we're in that kind of final blow off top moment. So it doesn't have to be very deep. I wouldn't be surprised if it isn't. At the same time, we've got gold continuing to hold its levels and push up. I know those mining stocks, I can see a bunch of people taking profit. There's nothing wrong with that. But I reckon that we might be able to squeeze just a touch more out of these if I take my time here, as I always do. Bitcoin 117k. I mean, this to me looks like my count was correct the whole time. Looks a lot to me like Bob's count is getting invalidated day by day here. And I don't know. I think if we continue up for another week, we can certainly have hard invalidation on Bob's count. I don't think it's likely that we print a new low if we continue up for another week or two, but it is kind of still on the table if we top right here, right now. So that's interesting for Bitcoin. And what else is there to say? Frankly, yields are going to continue to come off, right? Look at this, breakdown, retest, possible resumption coming for the 10-year yield. And somebody, Tofu, keeps asking me to cover the NASDAQ. But I mean, it's the same deal, right? It's the same as the S&P. We are due a little shakeout. We're due a weekly cycle low and a daily cycle low soon. But this thing is like in its final blow off top moment. So it doesn't have to be a big correction. And even if it is, it's likely going to get reversed extraordinarily fast as we head for those kind of final moments. Note the VIX as well, okay? Every single spike since the tariff tantrum is resolving to lower highs and more compression, okay? Speaks again to having that final blow off top moment and then having to get some hedges on. And I think that's pretty much it, right? Other than the Dixie, which is thinking about faking a breakdown here by the looks of it. So we'll see. I've got this here, which is a inversion in the 3-year cycle as well, because that fits my deflation idea. And I otherwise can't get the 3-year cycle to make the right shape, but I'm very on the fence about this count right here. Betting on an inversion in a yearly cycle is an extremely low probability outcome, so it kind of doesn't make sense for me to bet on that. But based on the macro analysis, this is the only way the count fits. So I'm exhausted. I think I talked way too much there. I will turn this off for some clarity. We'll stick a Bitcoin chart on here since that's everyone's favorite, and I will hop into the chat and see what's going on. What we got? Oh, I better go and do this actually first. Fan funding. Sword, level 3 member for 5 months, said, "Hey Camel, just finished the last bit of your video from yesterday, and I want to say that in the last 6 months you've changed my life. Thank you. You're doing what you have to do to stay on the right side of the trade." Thank you, brother. And I can't really do anything. You can only do it for yourself. So don't thank me. Thank yourself. Keep that risk managed. And yeah, I wish you all the best, brother. I really do. I'll scroll up a bit, see what I can find. What do I think of Tao? Same thing as I always think, brother. Hulk Hogan voice. I'm not sure. I don't get the reference, but Riot about to go Super Saiyan. A lot of those crypto stocks seem to be going Super Saiyan. Powell said, what did he say? Labour market is falling apart. So I don't know why the dude says, yeah, I don't know. Camel, drop the hammer of truth. I'm trying to, bro. I'm trying to. But don't take my word for it, right? You know, go and verify the things I said. And call me out, just like you should call everyone else out if they are demonstrably wrong. Your gut tells you Riot announcement is coming. I don't know, man. I never pay attention to those kind of things. Yeah, I don't know. It could be, but I don't think it needs to. We're just in that kind of final portion of the rally, right? So this is the banana zone. As cringe as it's become to kind of reference it, and as early as many of us have been in throwing that term around, I think we are finally here in terms of the 4-year cycle to summon the banana, right? If I type in Bitcoin all-time history index and zoom all the way out, let's put it on a weekly time frame, right? Oh, we need a log scale for this one. You know, look how late we are in a standard bull run, right? There's no time left. No, what the hell did I just say? There is no time left, right? We have used all of it up, nearly, okay? And yeah, there's a bit of wiggle room here. Like if I have to pull this back a little bit, does it matter? No, not really, okay? But if I go onto the monthly time frame, is this month 34 now? Yeah. Okay, so next month is month 35, and if you look back, that's what we typically use to get to the ultimate top. So there might only be 1 or 2 big green candles left, and then this whole thing would be over. It could be as little as, you know, this could be the top this month, and it could be the month after. It could be as late as Q1 next year, right? I don't think I personally want to bet on Q1 next year. I think it's probably going to top sometime before December. That's my thoughts. But, you know, one day at a time. But, you know, the point remains as well that we've used most of it up. Okay, this is just the objective reality. And once we've used most of it up, that's when you start to see charts like Riot, for example, move back here, starting to morph into looks like this. Yeah, they start to go Super Saiyan. Like Wolf, I know Wolf is a big one. Okay, that's been Super Saiyan as well, hasn't it? And Iren, I think I must be still on log because these charts look very weird. Turn this off. Yeah, Iren, another one, going Super Saiyan, right? So, whatever Super Saiyan is. But yeah, we're just in that time. Oh yeah, Bit Farms, that was the other one, wasn't it? Yeah, I mean, happy days. Oh, look at that gap as well. I mean, I try not to look, to be honest. The members are very good they're very quick to tell me, like, this is mooning, that's mooning. But the more you look at this, the more you become a tape slave, and the harder it is to stay on trend, you know? So I still maintain that the big picture outlook is hopefully something like this, okay? And it's going to be difficult to stay on that for sure, but we'll do our best and we'll see. I don't know if it's not cool, right? I'm not saying this is going to $10, but if it is, I do want to be there for that. Of course, it's misinformation. It's on X. Yeah, yeah. You're right. Master of Whispers is going very. Yep. Need the masses to believe the lies. I don't know about that. RE revised US job figures. Found out on a YouTube podcast the US analyst is due to the BLS not getting responses on time. Is it though, or is it just all part of some top-down, orchestrated, controlled demolition thing? I mean, as always, my tinfoil hat is a lot tighter than most, right? But I don't believe this is just incompetence. I just can't believe it. I think this is entirely on purpose, to be completely honest with you. I think they know exactly what they're doing. Can you explain why QE is ineffective? Not right now. Please look at destroy these old. Nope, thank you. Day 18. What? Bitcoin day 18. Oh, goodness sake. I still can't use this chat thing. Bitcoin day 18. So maybe your count was right. And now we're starting the third cycle. Yeah, I mean, until we make a new low, then my count is right. And of course, with every day that we move higher and we get further away from this low, then to me at least, the less likely it is we're just going to suddenly plunge into early October. Now, I have been saying I would actually rather be wrong, because if we can get the weekly cycle behind us into the early October timeframe, then we've got all of October, all of November, all of December to have a big blow off top, left translated-ish weekly cycle, or mid translated, and then we can top for the 4-year cycle as well. Whereas if I'm right and this is the correct count here, then we probably got a little push up to this daily cycle low. Then we're going to have to invert into a weekly cycle low, at least based on all the profiles of the prior weekly cycles. That's what they've all done, right? 360 days and then an inversion to give the weekly cycle. And by then, you know, we're going to be early November-ish, right? Which means the left translation's all going to have to get done in 6 weeks. I mean, it's definitely possible, but I just think if we can tuck the weekly cycle in early October and get it behind us now, I would rather bet on much higher numbers if we've got 3 months ahead of us of bull run versus, you know, if we have to do this and invert, then it's going to be quite difficult for me to kind of expect to see much higher numbers in just 6 weeks. I mean, it is Bitcoin. It can do whatever it wants, right? So can't discount anything. But like I said, I would much rather get this weekly cycle tucked behind us if we can. It would also align with this count, wouldn't it? Week 25 for the stocks, and that would speak to kind of like the everything moment, the insano berserko blow off top moment into the end of the year. And also that would just be nice from like a lifestyle perspective, because we could sell, go and have Christmas and then come back to the end of the world, right? Financial Armageddon. And at least we'd have, you know, taken the chips off the table, so to speak, and we can just kind of worry about it going into 2026, knowing that we're targeting those 4-year cycle lows later in life. But I don't know, man. We'll see, right? Markets don't always give you the kind of nicest lifestyle choice. Why do you prefer Brexit over other indicators? I don't really like the Brexit. I don't really use it that much. I actually use it in an extremely biased way, to be completely honest with you. I've said this a few times before. So, like, for example, all in here, okay, there's a, oops, what did I just do? You know, here, it's kind of like, okay, there's a cross, but I don't know, it's not below. This for me is a big signal when it goes into oversold and crosses, okay, but here it just didn't work out. Okay, here, it didn't get oversold. Then here, I would have negated it, because again, it's not oversold. Same here, same here, same here. It just regularly gives terrible signals, I find. And I know a lot of, well, I say a lot, there's not that many cycle traders that I'm aware of at all, but I know some cycle traders that kind of live and die by the Brexit, and I find that they often get chopped up and caught out by this thing, because there are times, for example, I'll see if I can find one on the chart here. I think there's one in Bitcoin. I think Bitcoin's got a good example. Yeah, like here, right? It tops and it crosses bearish, it confirms, crosses bearish again. It diverges all the way down, and Bitcoin just rallies, look, from here. It just rallies ruthlessly whilst this thing is going the complete wrong way. Yeah. And then like it crosses here, and we kind of used that at the time to confirm a new cycle, but it wasn't really the ultimate low. We got this kind of fake out failed cycle, or a later cycle, which is how I'm counting it now. Like, I just don't think this thing is super useful that often, personally. So I cherry pick when to use it. I'm not afraid to admit that. And it's kind of something that if it shows confluence with my bias, I accept it. And other than that, I just kind of disregard it nearly all the time. What is the probability of a weekly cycle low already in for Bitcoin? Pretty low. That's way too early, I think. Any opinion of yours on healthcare stocks? Nope, no opinion. Around this time last year, thought potential top calls were early due to the 18-year real estate cycle, but it started topping now. Yeah, I don't know. The problem with the 18.6-year real estate cycle is the top moves around plus or minus a year historically. People that use it don't like to admit that. They like to take it as a gospel number, but it actually does move around by a little over a year if you look back at historical data. So having a tolerance window of like 24.5 months or something, for me, that's not that useful. But I don't know. Proper crash in 27 or 28? Nah, I don't think so. Does the camel cycle indicator apply to slice members? No, they're separate. It's a separate thing. Any thoughts on people speculating on elongated bull cycle? I just think they're wrong. I just think the majority of people that use the term cycle don't have the correct definition, or they at least have a different definition. Like some people measure it halving to halving. Some people are talking about cycles measured from low to high. Some people are measuring them from top to top. And, you know, it's kind of silly. It's just kind of silly to say that. So, or at least it doesn't pertain to cycle trading in the way that I use it, right? Like the Russian dolls nesting shorter time frame cycles inside of higher time frame cycles. So yeah, that's all I really have to say about that. I think you either use this kind of cycle approach, in which case, you know, it's very rigid and well defined, or you're one of the other people that kind of throw around the term cycle but don't have the correct definition. We never want the masses to lose money, but it's the most likely scenario. Yeah, I guess so. Your account has the half cycle low the day before, oh goodness sake, Bob's cycle low at the start of October. I don't know what you're talking about, to be honest. Your account has the half cycle low the day before Bob's cycle low. Yeah, so that's the half cycle low there, I think. How much return can we expect to make in a bear market? If I don't hit 20 to 30%, I'll be disappointed, frankly. But I hold myself to a high standard. I think I'll be upset if I only hit 30%, but it's probably not realistic to hit 100%. 70 to 100 in a bull market, I'd say like 30 to 50% in a bear market would be, I'd be happy with 50%. If I could hit 50% in a bear market, I'll be over the moon. I'm not saying we will, let me make that clear. I'm just saying that's what I'm aiming for. And 20 to 30, I'll be like, yeah, okay, well, it was a tough year. Can you do Soul, Camel? I guess. For you, brother, for you. Oops. Samandi banana. Nearly, right? Nearly getting out. We'll see. 1, 2, 3. Yeah, it's probably like, is this one in here? I think so. Pretty jank looking, only because I'm not drawing it properly. But yeah, something like this, maybe. I also wouldn't be surprised if we have to set this slightly different. And the reason I say that, for goodness sake, is it might do this. Breakout, retest, set that third, and then go. That would be kind of normal, I think. But yeah, we'll see. We'll see. Agree, it moves a couple of years. Yeah, I mean, if you think it's useful, use it. Just because I don't like it doesn't mean... I know a lot of people use it. A lot of people find it useful. But I personally have never tracked it, really. I just kind of... I don't know. It's just not for me. I think maybe what it is it's kind of longer than I would ordinarily track. I think I really only kind of focus on like the 3 and the 4 year cycles typically. 8 for gold is as long as I go. Your number of followers will have a blow off top soon. Yeah, we'll see. We'll see. Should we unsubscribe at the top? It's up to you, brother. The funny thing is, even the people that unsubscribe or don't subscribe, like a lot of those guys tune in every day anyway. So that's what counts, right? The subscription number is good for ego boost. I guess it's kind of like the go-to metric, isn't it, for measuring a channel? But there are a lot of finance channels that have hundreds of thousands of subs and they get less daily views than I do. And that's, to me, just speaks to like the burn and churn industry. So my goal has really been to try to maintain the number of daily viewers, right? Because if my viewership drops after the bear market, it means most people got wrecked and quit. So if I can just keep us on the right side of the trade, then people should keep coming back. And then hopefully we won't end up with one of those channels that you see in the crypto land with like 800k subs and 15k views. That's the real litmus test, I think. How wrecked do you get your followers? Can I do XRP? Yeah, someone asked. And Ada. We'll have a look at those. XRP, yeah, oh my goodness. We've been talking about, haven't we, 2 scenarios here with this yellow squiggle. I keep moving it because I'm not sure which one I like the most. I had it here for a while, and then I was like, yeah, I think it probably needs to do that. And so far, now I'm kind of thinking that was right. I don't know, to be honest, I don't know. But I think it'd be one of these, right? And really, it probably depends on which one of those Bitcoin counts is right. If the low's in for Bitcoin, the low's probably in for XRP, right? And it's probably this. And if Bob Lucas's count on Bitcoin is going to turn out to be correct in the next couple of weeks, then I would think it's this. But either way, I don't think it makes a big difference. I'm bullish on this coin just because of how hated it is and how dumb it is and how integrated with the New World Order and all of that kind of stuff. And what was the other one? ADA. I don't like this coin, and it's a personal vendetta I have against its creator. I really don't like Charles, but whatever. Anyway, it's broken the range, hasn't it? For now, it is trending up. There are, roughly speaking, some angles somewhere. Here's one. Here is 2. Probably this one's better, I would think. So we'll see. But I also think it needs to get through. Oh, it kind of is just about getting through here, right? I'll probably be as strict as I can before I'm super bullish on this. But we'll see. We'll see. That's all I can really offer, unfortunately. When next podcast with Wad? What? God, I can't read anymore. When's the next what podcast? You want to hear more about aliens? We'll definitely be doing aliens in bear markets. In the bear market, we'll do a lot more of that stuff. I don't know when the next what podcast is. I haven't heard from Andy in a while, actually. Camel, you got a lot of patience today. Oh, I have. I don't know. I think I've been a bit irate. Take a look at Heart. Why, brother? You're making it hard for me to hold this thing, right? Wow, look at this go. Boom. Yeah, we'll check in next week, all right? There's a members video on Saturday. We'll deal with it there. Tesla, I guess so. Tesla's no changes since the members video, is it? Yeah, breaking out as expected. Cool. What else? Would IREN eventually be an incredible shorting opportunity? Probably, yeah. If it can break the 4th angle a bit later in the year. MSTR, is that still trying to hold support? I guess it is. It's really fighting for its life down here, isn't it? It really doesn't want to lose the line in the sand. So we'll see. We'll see. Camel indicator's got a low in here. Maybe. Maybe. Can I take a quick look at PLTR? Yeah, I can. I mean, is this breakdown retest resumption for phase 4? Possibly, right? Or we might need to redraw phase 4. I saw somebody else with a slightly different way of drawing this. I think they moved phase 1 up and then had this as 1, and all of this is the next one. So phase 4 is yet to come, which I don't know. Like, how high is it going to go? It's going to be 4 digits, isn't it? 4 figures, if that is correct. But right now, I think this is trying to break down from phase 4. You're going to need to keep moving XRP because it will continue to be a dud. You're one of the haters for sure. Well, it's not really a dud. It's outperformed Bitcoin, right? That's like the annoying thing about it. It's like, no matter how much people hated that coin or how dumb, you know the bell curve, right? The that silly investor meme with the bell curve, and on this side you've got the Jedi mastermind, and here you've got like the low IQ dude, and then everyone else is mid curving it, right? XRP, I think, is the best example of this. It's like all the holders basically fit on this side, and then there's a handful of them that fit on this side, right? And everyone else that hates it's in the middle, going, oh, Brad Gardenhouse is dumping the bags, or like, oh, this is, they just sell it onto the holders and blah, blah, blah. Insert your narrative in here, right? But the reality is, the absolute truth of it is, this is one of the best performing coins this cycle, right? Absolutely it is. Like, it just has done It's just done way better than almost everyone else's alts. And if this thing can catch a pump to, I don't even know, like $6 to $8, then this will certainly be one of the ultimate performers. It would have smoked Bitcoin's performance, okay? And I don't know how high the thing can go in like the most bananas kind of expectations, but if it did $12 or something, like, I wouldn't be shocked, right? I'm not betting on it by any means, but I wouldn't be shocked. And again, it's kind of like, there's a beautiful irony in it, right? It's like the dumbest investors in the market will make the most amount of money. Like all of the TikTok bros, right? And the OnlyFans girls and that kind of thing. Like they're the ones that are going to be like the top performers of this bull cycle. And the simulation has like a funny way of torturing people like that, right? It just has a funny way of kind of like throwing these kind of sense of humor type of situations out there. So yeah, I don't know, man. Never say never. That's all I know. I know it's easy to hate it, but it's also kind of funny. Like if you can detach yourself from it, it's pretty funny. Especially because the types of people that are making money on this coin, right? They're outperforming most of us, let's be honest, right? If you hold a big bag of this, you're outperforming almost everyone. And at the same time, you have so little market knowledge that you think 1,000 or 2,000 is possible because, you know, market cap doesn't matter. What does it matter if it's like 49 quadrillion, right? Like market cap is imaginary, right? Like that's who's outperforming you. do you see what I mean? Like that's what's so funny about this whole space is like the dumbest people sometimes do the best because you can overthink this stuff. So yeah, I don't know, man. I don't know. Check Circle. Nah, it's just an IPO Coinbase thing. We dealt with that. Oh, we dealt with that in the Slice Crew. Rolex. I don't know about Rolex. We'll do that later. No changes, I would think. GME and Galaxy. Possible. I don't do price targets. I'm a trend follower. I don't know what Galaxy is, but oh, GME's finally moving. That's cool. Chainlink. That's been another one that everyone's super bullish on, but the price isn't. It's just not doing the kind of numbers people thought it would, right? It's done okay, but I don't think it's even outperforming Bitcoin at the moment. So maybe it is ever so slightly. Still planning to long Coinbase? Yeah, I think so. I don't know if it's bottomed yet. I've still got loads of this, like absolutely loads. Because remember, we loaded up here in the Tariff Tantrum and we've been holding it since here. And we've caught a lot of the pumps along the way in short-term accounts. So this is one of my biggest positions at the moment, I think. Yeah, this and some of the other crypto stocks. So if I don't really need it in the short-term account. If it does this, then I'm laughing all the way to the bank. But yeah, I don't know. I'm not convinced something like this is not coming. That would speak to Bob's count being right. I guess if my count is right, then it is probably bottomed here. Time will tell. What's the time? All right, okay. We stay for a little bit longer. Any updates on potential TLT trade? Not really. I think it's still the game plan. I'm looking for a top here soon, roll over weekly cycle, and then I think it'd be time to get hold of that. What are my thoughts on ETH treasuries? I don't really track them. SBET, I think, is comical. Only because people... This makes me laugh every time I look at this chart, right? Because you look at this and you kind of think, oh, okay, maybe. Like, maybe this thing can pump, right? And maybe it can. But I tell you what I think is hilarious, especially if you put it on like a weekly or a monthly time frame. This thing has been a downtrend for like 20 years. For like 20 years, right? Look at this. Lower highs since 2000. 25-year downtrend, right? It's not even visible here at the hard right edge. And it's kind of like this stock is 100% going to zero. And now they've been like, oh, I wonder if we can just buy some Ethereum. I wonder if we can save this by buying ETH right at the top of the 4-year cycle. So, I don't know. To me, this is comical. If you want to trade it for some pumps and dumps, feel free. But I don't mess around with things like this personally. Top performers, if they sell, that's a good point, and they probably won't sell because they'll be targeting $1,000 XRP, right? Yeah, well, we've all sold things too early, old man. Don't worry about it. Don't worry about it. Don't torture yourself with it, right? You can just let it go and know that next time you'll get the opportunity to ride a hyperwave, you now know how to manage them, right? So don't beat yourself up. IRN deep dive. I'm not a deep dive guy. So we just count we count the lows. We count the days between lows here. That bell curve I drew a minute ago. Okay, we're on the far left-hand side of that. We count time and we say stupid stuff like, what color is the Fed's tie? Is it purple? Is it purple? And have we elapsed 40 days, right? That's what we do here. There is no deep dives. Yeah, I got the good autism. I'm fortunate in that. How's car finance doing? Yeah, he's good, thank you. To be honest, I've actually only just started enjoying being a dad. The first few weeks, I was like, bro, this is rubbish. They don't really do much, but he's just started smiling at me now, and he started, like, I can see development. He started, like, playing with little mobile toys and stuff, like, you know, the ones that dangle above their head. Not mobile phones, obviously. Yeah, he started, like, I don't know, I can just see development and growth in him now, and he, like I say, he recognizes me sometimes, and that kind of thing, and I spend more time. The first week, he, like, pretty much cried every time I touched him, and now he'll actually, like, sit with me and chill. And I swing him around and sit with the dog on my lap. I actually enjoy it now. But yeah, so yeah, it's really good. The first few weeks though, I was like, oh no, I was like, this is terrible. But yeah, it's good. The JISA is funded. I put 9K in the JISA. It's open. It's connected. It's ready to go. I just haven't made a video on it yet. But I am going to do that. I'll try to do that this weekend. It's getting the balance right, because I've got, like, a lot going on with trades and stuff. Like, everything is kind of, like, exploding, which obviously is a great problem to have. But, you know, I've got to kind of get the balance right between pushing these trades and also, like, not giving back all the gains, making member videos. There's the Slice platform. There's constant work going into the Camel Finance website and the indicator. And then at the same time, I've got a 5-week-old baby, a dog, a wife, and we're trying to facilitate my wife not going insane. So we're going to the pub in a minute with the dog and the baby, and trying to squeeze it all in between this. Plus, I go to the gym every night for a couple of hours. Yeah, so it's a pretty stacked day, and then fitting in an extra video is sometimes a little difficult, but I think we're going to get there. Just give me a few more days, I guess. You're really into gold and silver stacking. How can a tier 3 sub help me? To be honest, at the moment, it can't. If I'm being completely honest, at the moment, you've kind of missed it, right? We got long out of this weekly cycle low, and we added a whole heap of these from down here, like the mining ETFs and individual mining stocks. Newmont, for example, we added that down here as well. Oh, excuse me. Wait, down here. Wait, where is it? Where's the? Yeah, it was here. Yeah, I thought I was right about that. Yeah, we added it somewhere down here. Okay. And now we're just kind of pushing all these trades like this. I know CDE is another one. I can't even remember them all, to be honest. But yeah, the point is, we played the weekly cycle, we're sat in profit, and now we're just pushing them until it becomes unreasonable to keep pushing. Then we're going to lock down the gains. And then the strategy is to wait for this half cycle low in the 8-year cycle in 2026-ish and load the boat back up there. So if you're only interested in gold and silver, there's not a great deal you can do in the member section on these two assets in particular, apart from wait until 2026. But at the same time, there are other assets if you want to trade and see how else we capture gains. Like, we do all kinds of weird stuff, like the semiconductors ETF was one. It was like an outside the box one for me. Yeah, so it's up to you. But if you're only interested in gold and silver, I would say join like the middle of next year, and then make sure you got some cash ready to go. Camel, wondering on your thoughts on this. You've been reading heaps of books, doing research on cycles. Are you a believer that cycle theory is 100% based on market psychology? No, I'm not. I actually believe it's like coded into the universe, like gravity or pain, right? If you jab a fork in your hand, it will hurt. And like, there's no scenario in which you can jab a fork in your hand and it doesn't hurt, because it's part of the code of our universe, right? And it's the same with gravity. Like, it doesn't matter whether you believe in it or subscribe to the idea or hate it or think it's nonsense. If you jump off a bridge, you're going to fall. And that's what I think about cycles. I literally think that it doesn't matter what anyone says, thinks, or does. Like, they were coded into this reality. They show up everywhere, from moon and tide to biological to ecological. And for some reason, they show up in markets. So that's just my interpretation of it. I'm not saying that's correct, but that's how I look at them. Do I have a time target for gold miners? Do you think silver miners can run longer? Yeah, I've drawn it, haven't I? I've drawn an ellipse in here. So that ellipse started September the 3rd, and I've worked it out to be any time between now and February, where I expect them all to top. Probably not going to top at the same time, probably be a bit annoying actually. Some of them will probably kind of chop around and go higher, and others of them will probably like chop around and break down, but it's not really about perfection, right? We've already made enough gains, it's just about really now locking them in, starting to lock them in slowly over time. And silver I think will go higher, but we'll see. Will I be with you to survive the next bear market? Yeah, I'm definitely going to be here for a couple of years, at least, maybe more. Any book recommendations? No, I don't like books really. Bitfarms looks good for now at least, right? What's my view on mortgages coming next year? Well, my view is pretty much, I've been thinking about making some kind of video to really kind of put this out there. What I think is going to happen, oops, where is it? There. So here's what I think is going to happen. I think, I'm going to try and draw a yellow squiggle, get my timing right. I think what we're going to do, that's 26, that's 27. So, and where's 0? Oh, goodness sake. Okay, here's 0, 20. I think it's going to look something like this, right? Is that low enough? Maybe slightly lower. I'll just drag this down a bit more. Okay, I think it's going to look something like this for rates. Okay, and then some kind of bottom, and then this. That's what I think, okay? And if you really think about it, how does this work? Oh, look, we're going to go back in time, right? We're going to break the matrix. But if you really think about how this works mechanistically, okay, we have started the rate cutting cycle, and the bond market in aggregate is going to, you know, push these yields down by buying debt until eventually we're at or near 0. Then I'm calling for record QE. Okay, now if you think about what happened going back to the pandemic era, okay, we saw a record amount of QE for its time, about 6 or 7 trillion total, right? And that drove inflation up to double digits. In the UK, I mean, they were reporting like 10-ish%, but it was really like 20-25% for at the time, right? At the peak. And that was caused by 6 trillion of stimulus. And in response, they went on the most aggressive, fastest rate hiking cycle the world had ever seen at the time. Okay. And then we ended up around kind of 5% on the 10-year. Mortgages ended up, you know, very expensive. And then we kind of have ended up paused at the Fed funds rate, and now the yields are coming down again, okay? But just like what we saw back here, where we had record amounts of printing, huge amounts of double-digit inflation, and the response to that is an ultra-aggressive rate hiking cycle, okay? In fact, let's just illustrate this a bit further here with this. Okay, so again, we have record amounts of stimulus come out of here. Inflation, of course, lags, right? Remember, anything you do to the printer takes about 12 to 18 months to show up as inflation because we need velocity. And it would have been way worse. This is another thing you've got to keep in mind. It would have been way worse if we weren't all locked in the house, okay? But because everyone was locked in, velocity, aka how many times or how often money changes hands, was stemmed massively. Okay, because we were in our houses not spending it, we were just throwing it into the stock market, right? So it would have actually been way worse in terms of inflation back here if we didn't shut the entire place down. But what we ended up doing, again, let's be clear, printed a bunch of money, okay? 12 to 18 months later, it starts to manifest as double-digit inflation, and they have to respond to that by this here in the Fed funds rate, okay? The fastest, most angriest, most aggressive rate hiking cycle the world has ever seen. Okay, then the yields, you see the bond market goes flat, and we tell that to the bond market. This is how we predicted the pause. And then, of course, they start to break down, and now we're putting cuts back on the table. Okay, so following this logic, what I'm saying is going to happen is the exact same thing, just out of the next 2026 major 4-year cycle lows. I'm saying we're going to continue to slash the rates. Okay, rates are going to come off. Fed funds rate has already started coming off, right? It's kind of down here. Probably going to continue to do this. It goes sideways again. This is the Fed funds rate down the bottom, right? And then what we'll get is record QE, but this time I think it's going to be north of 20 trillion. So we had 6 or 7 back here. I think it could be 20 or even 30 globally. Okay, and then of course 12 to 18 months later we're going to have massive inflation. And how do they respond to that? Well, the only way they can respond to that is to grab the Fed funds rate and the interest rates, okay, and hike them even faster, even more aggressive, to double where they were in the peak of this cycle. So what does that look like? It looks like a 10, 12, 15% 10-year yield. okay? And if we get a 10 or 15% 10-year yield, then the mortgage rates, because keep in mind this is derived from the mortgage rates, they're going to be through the roof, right? You're going to see in some places for the earners that suffer in, you're going to see like 15, 20, 25% mortgage rates for the people with like really bad credit scores and that kind of thing. I mean, that is gnarly. That is really, really gnarly on record inflation, okay? And this is what I believe is how we actually end up ushering in the CBDCs, because if everyone is not inflated to death and over leveraged on their mortgage and defaulting on their mortgage, then you're not going to be able to convince them to switch to CBDCs, right? But if you, first of all, hit them with 20+% inflation after the record printing, and then you hike the interest rates to 12 or 15% on the 10-year, right? Then you force them to lose their house, their job, because of course the labour market deterioration is going to persist all the way through this recession, and then people are going to end up like begging for a CBDC. Oh, please, Mr. Government, give me $2,000 and let me convert to a CBDC, right? That's what it's going to be. And that's the whole kind of thesis of this channel since inception, is that this is why I do what I do, because you either understand this mechanistically and position yourself for it, or you're going to be caught in this reset, right? And CBDC and probably lose everything else. So it's pretty dark. It is pretty dark, but I think it's probably getting towards that neighborhood where it's time for me to start kind of talking about this more again. I used to talk about this a lot when I first got the channel, and then I kind of got sick of talking about it. It kind of feels very doom and gloom. So we just focus on the cycles and enjoying the bull market, but we're kind of getting back into that territory where this has got to go back on the table. And so in summary, there's a couple of things of note here, okay? If I'm right, then the yields come off, they go sideways at or near zero for a while, and then they get hiked to double where they were here, okay? Like double digit 10-year yield. So if I'm right, you can track this in real time, okay? We should continue to come off, we should go at or near zero for a while, and then we should see them spike. Now, if I'm right, in here, you absolutely want to be locking in your mortgage for the rest of your life, right? You do not want to be on a variable rate. You do not want to be having a mortgage that expires in 2 years or needs refi in 2 years, right? You want to be locking this down for as long as possible. And you probably want to be telling everyone you know and love and respect to also do the same in here. You want to be begging them to lock down their debt at or near zero, right, for as long as they're going to be alive, because anyone that doesn't is going to be susceptible to this huge hike. And then what if I'm wrong? Well, if I'm wrong, we won't get this, right? Something else will happen. And if so, then you can just disregard everything I said and be like, well, Camel doesn't know what the hell he's talking about, right? But the risk here, if I'm wrong, is kind of nominal. If I'm wrong, you just go, oh, well, Camel's an idiot, right? He didn't know what he's talking about. But if I'm right, the implications of this and being able to be on the right side of this trade are massive. They are essentially the difference between you losing your house if you've got a mortgage, or, you know, you not losing your house, right? Because if you think about how much you're paying on your mortgage back here versus here, right? Now extrapolate that out again, double the amount. Right? Like, it's a very nasty situation, especially with double-digit inflation. How much, you know, printing they did here, 6 or 7 trillion. I'm calling for up to 30 trillion globally. That is enormous quantities, right? You know, this is going to be a drop in the ocean compared to what I'm calling for. And again, I could be wrong, right? And you can easily invalidate what I'm saying. If we get here, we only see like 4 trillion of printing, then again, I'm an idiot. I don't know what I'm talking about. And that's fine, because we're not cheering on triple digit inflation or double digit inflation, right? We're not cheering on people to lose their houses. I'm not cheering on a 15% 10-year by any chance, by any stretch of the imagination. But it is worth keeping an eye on this setup, because like I said, if I'm right, it's going to be obvious the entire way. We're going to see these come off for a little while, we're going to see them pause, and then we're going to see them start to be hiked. And if they start to hike them here, right, and you cement your debt, you lock it in for the rest of your life at these low rates, like, what's the worst that can happen? Right? They roll over a bit more and you go, oh, I could have locked them down slightly cheaper, okay? But what's, you know, the other scenario is I continue to be correct and you lock them in right before this happens, yeah? So I think we'll maybe end on this. I don't know. I hope that answers your questions. I'll maybe hang around for a moment more. What's the time? I have got to go down I'm going to take the wife for lunch, I think. We go down the pub and walk the dog on the beach. Try to forget how dark these end times that we live in are. So yeah, I hope that answers your question. I hope that kind of answers that. I will probably try to make a bit more content on this a little bit sooner, but we'll see. I can see people talking about selling too early. There's not really such thing. There is and there isn't. Geisha series is coming, as I said. Please never turn your kid into an iPad kid. I won't, don't worry. I don't even watch TV or play on iPads or video games or anything myself either, so don't worry about that. Can we look at Bitcoin dominance? No, we'll have to do this again next week. It's time to go to the pub for a couple hours. Thank you, old man. I appreciate it. Do I follow Pokemon cards? No, I'm a bit old for that. Thanks for clarifying this. You're welcome. 5-year fix. If you can afford 5 years, I don't know, pay the early exit fee if I'm right. You know, follow my idea. And if I'm right and we get at or near zero, okay, and we go sideways and then they start to talk about printing, then just pay the early exit fee. I think it'd be worth paying a couple of grand to exit that and lock down a new mortgage, I think. Not financial advice, but I'm just saying, you know, it's pretty simple, right? You pull up one chart and you see if it does this, okay? Or look at the Bank of England interest rate. That's another way to do it, okay? And if it does this shape for a while, then in here, you've got to be thinking to yourself, looks like Camel was probably correct, okay? And other than that, make your own decision. And I hope you're okay. Like, I hope it works out for everyone. I don't know anything about Pokemon cards, bro. I've got a wife. Go and touch some girls, bro. Consensually, of course. Don't just touch random ones. Touch grass. Yeah, pub grub. I'm going to get a pie. I found a place that does a really good pie of the day. Yeah, so thank you, Mark. I appreciate it. We don't do price targets, brother. We don't do price targets. We follow the trend until it breaks. So yeah, all right. Well, I'm exhausted from talking. I think I talk way too much. Probably like tens of thousands of words in today. But yeah, we might have to come back and do another one of these in a few days' time. Maybe next week. Other than that, we're getting unhinged. Yeah, we are. Yeah, all right. Well, thank you all for being here. I hope you found some value here. I hope you enjoyed this, if nothing else. And yeah, keep an eye on this whole bond market idea, okay? Pretty easy, again, to invalidate. If I'm right, then we make that shape, and debt has to be secured, refinanced, or at least considered to be refinanced. Other than that, have a fantastic rest of the week. Expect some chop games and volatility, okay? So don't be a tape slave, as always. Keep the risk managed, as always. And I'll see you tomorrow again, as always. So once again, thank you all for being here. Have a fantastic rest of the week. And I will see you tomorrow. Okay? Until then, all the best from me. Cheers. Bye.